What is up everybody, welcome back to another stock market video. Gifford here, and today I'm going to be talking about a portfolio update. Since I started this channel about 1 year ago, I've now currently got a total portfolio of over $40,000, so I'm going to go over all three of them. The three platforms I use is Hatch, Sharesies and also Investnow, and all of these platforms are from New Zealand where I live, so I'm going to go through with you all of them and all the individual stocks that I hold in them and why I actually use each platform. I'm also going to cover a little secret of why you shouldn't follow other people's portfolios and what stocks they buy without having a look at their transaction history, but more on that later. As usual, hit like on the video, it helps the channel out. And if you're interested in investing in what I'm doing, feel free to subscribe. With that said, let's just get on with it. So just to start things off here, it's just a screenshot of my total portfolio and where the money's allocated. So as you can see, it's in my Investnow, there's $1,060 in there. In my Hatch account, which is my biggest one, there is $35,700 in there, and a Sharesies account, which is a little bit tiny, only 10% of the whole portfolio is $3,970. That brings us a total of around about $40,790, and not all of this is invested money, which I'll go over shortly. So right now we're in my Hatch portfolio, and as you can see, it's a Sunday here in New Zealand. When the time I edit this and release the video, it's probably going to be a Monday or Tuesday. But anyways, the stock market opens in 26 hours. Let me just change this from USD to NZ. So you can see here it's $35,763. And the biggest point here in my portfolio currently is that I've actually got 22.7% of this in cash, with talks on inflation, and then the stock market's kind of just been going sideways, so I'm hoping to get a bit of a dip later on in the uncertainty and pick up some cheap stocks. But right now I don't really see any of my favorite stocks that I want to buy into. So in this video I'm just going to go over what stocks I own and how many shares I have. I'm not going to really go in depth into the companies as I do that in the other videos. So each of these portfolios does have a summary up here. While the summary is kind of correct or similar to the returns you get, you've got to be careful because they're a little bit different in the way it calculates it. So I don't pay too much attention to this anymore, especially if you're a new investor. You kind of look at this and you take it, but once you start learning each sort of portfolio, they kind of calculate it in a different way. So you've got to be careful because things get kind of muddled up when you buy a certain lot and when you also sell shares. But I'm going to show you that a little bit later on in the video when we have a look at the NIO gain. So you'll see in the NIO that is my top performer by 49%. So in this graph, if we go back 5 years, we can see that I started the account in April 17th with no money, and then if we go to the 1 year, it had $550, and for all the way up to the beginning of June and July, I didn't really take investing seriously because I wasn't sure. I thought it was a scam, so I wasn't really sure. But until I got confidence in it and figured out kind of what I was doing and which stocks I wanted to buy, it started to take off, as you can see here. And these have been the gains, so pretty consistent with me investing in it regularly. So in this portfolio, I only have 4 companies, and the first company I have is Tesla. And the current value, I'm just going to leave it in US dollars because it's a lot easier to read in US dollars. The current value of Tesla is $7,673, and the current return I've got is 7.66%. So I currently have 12.8 shares in Tesla, and my average cost is $556, and the current price we have here is just a little bit under $600. I did sell some Tesla shares when they were at a little bit higher, so that's kind of skews up my average price, but I was buying Tesla when it was around about $200 a share, and then it slowly started climbing up. But obviously I was dollar costing average, so every time I would get money into my bank account, I would then put it into here. So after I go through my 4 companies, we'll go into the main page and we'll have a look at the allocation across those companies and the weights in this portfolio. So the second largest company I have in this is Tattooed Chef, and its current value at the moment is $5,585 US, with a current return of $1,168. And we can see here my average cost price is $17.67. And its current price is $22.34 currently. And I've got 250 Tattooed Chef shares with a current portfolio value. The percentage weight is 28.13%. So the third stock I own is NIO, and that's currently at $4,194. Don't pay attention to the return here because I'm about to go over some secret with you. and show you why you shouldn't believe some of these stuff here, especially why you shouldn't follow other YouTubers if you don't know their transaction history. And now that the New Zealand 2020 tax year has closed, I can show you this here without having problems with it. So I've got 100 NIO shares and it makes up currently 21% of the portfolio, but see here it's got $28.14 average cost price, and then the current price is $41.94. So while you saw in that screen that my average cost price is $28 for NIO, you can actually see that I bought NIO just under $5,000 worth, and I've sold about $6,600 worth. But the most important thing here is that the value of the 100 NIO shares I have is actually $4,000, which means that those shares, although they have an average price on them, they're actually free shares because the price had gone up so much, and I've just been selling down to them because I think the stock is now overvalued by having the stock price at way too high for what they're producing. So it's kind of misleading, and this is why when someone says to buy a stock, you shouldn't really buy a stock just because they hold it in their portfolio. You don't know actually what the summary is, and they could have bought those stocks really cheap before they went all the way up, and now you're buying them at a really high price, or the fact that they're actually sold some stocks and you can't see the transaction history. So just be careful that going off someone's transactions is really dangerous, and this is why you should do your own due diligence and only buy the stocks that you know. Don't follow anybody else, and this is what I tell you guys as well. Don't follow me. Don't lose your hard-earned money onto what I do, because the money that I have is my own money, and I'm the one taking all the risks, and I'm the one responsible for it if I lose it, and same with you guys as well. So the last company I have in this portfolio is Palantir Technologies, and the current value is $2,400, and the current return at the moment is -5%, and we can see the average cost is $25.33, and the current price is $24 US, and I have 100 Palantir shares, and they're about 12% of the portfolio. So if you've seen some of my last videos on Palantir, you would have seen that I sold some out of the stock because I actually thought that I bought the stock overvalued and I don't believe in it anymore. I put a lot more money into Tattooed Chef, which is a stock that I believe, so I've taken quite a little bit of a hit on Palantir to then move money over to a stock I think has more growth and is more favorable to give me more money in the future. So here's the current summary of the 4 stocks I own. We can see Tesla is the highest at 38%, Tattooed Chef at 28%, NIO and Palantir both pretty low at 21 and 12% respectively. I'm not going to be buying any more of these guys, that's why I've just left them at 100 shares each, but I'm definitely going to be buying more of these two here. And in the future, if I find another company with good growth, I will add to this, but the main reason why I keep it to these 4 or just 2 stocks to buy is because I really need, it takes a lot of research to look into these companies and to always keep an eye into what they're doing. This is a lot of money to me, and I take this seriously, so I can't be messing around. It takes a lot of research into these companies every week to make sure that they're doing okay, and just to make sure the fundamentals do remain the same and I'm keeping up with the news. If you start to have like 10-20 companies, it's just too much time. Even I spend over 10 hours each week looking and researching, understanding the stock market, but if you kind of go over like too many, you're going to end up overloading yourself, and at some point you're going to miss some details out, and then you're going to get lazy and you're not going to do your research into these each week, and you're going to end up losing money. So now we're over to my Sharesies account, and that has $3,955. We can see here that I'm also a lot of cash in this wallet, so it's 38% of that, and I've invested 62%. So the first thing you'll notice is that there's a lot of minuses in this account, and you're probably thinking I'm not doing too well. So this account isn't really doing too well, but you can see it's minus 20%. Tesla's down on this account by minus 16, minus 15, and that's up by about 4%. So quite heavy losses in here, but if we go over to the summary, you can actually see that my returns in this is 900 plus, and that equates to 11.35%. And so as I said before, I use this as a learning account, and what I typically tend to do is I will still hold the stock long term, but I have some short term shares that if it goes up I might sell, particularly only really with Tesla that I did this, and kind of the same with Palantir, sort of buy sell, and that's where the positive comes in, even though they're a bit down, because I probably got lucky and I did sell when it was declining. So just to go briefly over this portfolio, we can see here that I did actually buy into A2 milk. Not very much, it's only 5 New Zealand dollars, but I'm gonna see how the price goes. In the last video I said I wasn't going to, but the price is just too cheap. So my new plan with them is just a dollar cost average into them as the price kind of goes down at only a small amount as I'm just going through. So the newest stock I've actually bought into this is Google, and that's only 20 US dollars. Over here I have the ARC Genomic Revolution Fund, so not too much into that, just under 200 US dollars. That's currently down at about 20% at the moment. So what I'm going to do is I'll probably put another $20 US into that and sort of average down. The next one I have Palantir here with only 5 shares, so not very much. It's currently up by 4%, but as I say, I'm going to buy 40 more shares when they hit my limit buys. So those buys limits are just sitting there. Whether or not they hit them, I'm not really worried. This is just, that's what I've said that I'm going to buy it at, and that's what I'm going to stick to. Because last time I thought they were quite overvalued. The next one is Teladoc, and I'm down by 15% in that one. There's just over 100 US dollars in that one, so not a very big position. The next one is Tesla, which is the biggest position in this one. So they're currently down by 16.5%, and I have 2.2 shares in Tesla, but I've actually made some good money in Tesla because I was buying it fairly low. In my older videos you'll see that I was buying it at about $300-400, and then it jumped all the way up to $900 a share. So I was selling it as it was coming through there, and that's probably why I've got some of the returns back in this portfolio. But again, I will be buying one share at a lower rate if it dips down. If not, I'm happy just to wait for the prices to come down. I definitely won't be buying them really high, because in this stock market game, it's all about waiting and only buying it at your set prices. So before I move on, the main reason why I use Sharesies and Hatch is because each platform actually has its pros and cons. So my main platform that I use is Hatch, and that's because to buy and sell it only costs $3 US. So to buy some stocks, any number of stocks, I think it's up to 300, but I don't have enough money to buy 300 stocks in one time, especially something like a Tesla or something like that. So they charge you $3 US to sell one transaction. It then costs you another $3 US. So if you are buying over 300 US dollars per one stock, that's about 1%. So that's typically what I try to do, 300 US dollars or 400 New Zealand dollars per transaction. That makes the transaction fees 1% with Hatch. Now with Sharesies, even though it's a lot cheaper, like you can buy smaller amounts, what actually ends up happening is that Sharesies is only good for lower amounts. So actually anything under 100, 200 or even 300 New Zealand dollars, you should be buying Sharesies if you're doing each transaction is lower than that, because it's going to be a lot cheaper for you. However, what I don't like about Sharesies and making the portfolio too big, it actually ends up costing you a lot of money because their fees are, it's a percentage. So for example, if you have like Tesla stock and it's quite a lot, what happens is once you start getting over the 300 US dollars, when you sell like 400, 500 US dollars, the fees actually goes way above the $3 that you would pay for Hatch. So I'll just show you this right now. So in this example, what we're going to do is we're going to hit sell on one of my Tesla shares. We'll go limit order, and I will put in $600. That's how much I want to sell it for, and I will sell just one stock just to show you guys. So here we can see that the estimated fee is $3 US, and that's exactly the same as Hatch. So if I was to sell, let's say 2 or 3 Tesla stock in Hatch, it'll be $3. But here, if I was to sell anything higher than one share, it's going to cost me even more money. So if we go back a bit and just change this to 2 shares, you can now see I'm paying $6 just to sell these 2 shares. So that's the problem with you get to higher amounts of money, and that's why Sharesies is only really meant for lower amounts of money. And also both Hatch and Sharesies don't always have the same stock listed on them, or the same companies you can buy. Particular example, you can't buy Tattooed Chef and also NIO on the Sharesies platform. I can only buy them off Hatch. Anyways, I hope that clears it up into why I use one platform or the other. If you have any questions, just put them down in the comments and I will get back to you. So the third platform I use is Investnow, although I don't really put any more money into them. I've kind of moved away from mutual funds or index funds, but this is the login screen right here. So Investnow is really good for people that don't want to invest in individual companies by buying mutual funds or index funds or ETFs. So here's my Investnow portfolio, and really the pros of Investnow is that they don't have fees when you go to buy certain ETFs or index funds. But what you do have to do is have a minimum transaction of $250 and obviously pay the New Zealand to US dollar exchange rate, which is typical across all the platforms. But yeah, as long as you have $250 that you put in, you can then buy $250 lots or any higher amount at all. And this is just good basically this is much better, I reckon, than putting your money into the bank, because these returns overall over a long time is pretty much around about 8 to 10%. If you just keep putting money into this, especially now that the interest rates in the bank, your term deposits are really low, I reckon the stock market's going to beat it for a while these interest rates are really low. So although I don't use this platform anymore, I highly recommend it for people that are just starting out and find individual stock investing into companies daunting, and all they want to do is get 8 to 10% on their money each year and just spending more time and effort into saving their money and just putting it into this portfolio. So this platform is super safe, super easy to use. You just choose the funds that you want, obviously look into the funds of each one and just keep investing your minimum of $250. But anyway, this portfolio has $1,060 in it, and we can see that 95% of it is in ETF. And here I've got the NZX top 50 ETFs, 379 of it at $2.68. And having a look at the performance of the ETF, we can see that I'm up by $19.65 on it, and it's got a return since inception of 12.8%, so still beating the bank rates. However, this 12% is also why I'm not investing in ETFs, because while they are low risk, I favor the high risk, high return strategy because I'm trying to grow my capital here. If I was someone doing low risk and just want to keep building my money slowly, this is a great platform to do it in. So anyway, that is my $40,000 stock portfolio. When I started this a year ago, I did not think that I would have $40,000 in it. I am pretty lucky that in the March crash in 2020, it pretty much doubled my portfolio as I happened just to pick the right stocks. And in saying that, I've also put a lot of research into stock investing and really understanding a lot of things about it, reading a lot of books about it, researching all these companies and trying to figure out how I can make money from this. So I currently don't have a target of how much money I want the portfolio to grow. All I'm going to keep doing is working hard to save some money and then be able to put it into my portfolios and invest it when I see some good dips in the stock. But make no mistake, $40,000 is a lot of money to me. That's probably what, half of a Tesla Model 3. So one day, who knows, if I have enough money and this grows to be a ridiculous amount, that I might be able to afford one. But for now, I will just keep going into the next year. I might even start looking at options and more advanced plays on that. But for now, I'm just going to keep learning, keep trying to grow my portfolio, share it here with you on YouTube, and keep posting these videos of what I do. Well, that's enough for me today. Thank you so much for watching. As always, safe investing, and make sure you do your own due diligence in the stocks that you buy. May the gains be with you, and if you have any questions, don't forget to pop them down there and I'll answer them. Also, don't forget to follow me on Instagram. I'll see you on the next video. Goodbye.